In this video, I'm going to show you what no other trader on YouTube will show you. But first, to give you some context, I've been on my longest win streak ever as a trader. It's actually been over a month of consecutive wins until yesterday, where I took my first loss. Now, I want to show you how much I lost, but more importantly, I want to cover 3 key concepts that I want you to be able to take away from this video and apply to your trading. I'm going to showcase the importance of consistently managing risk, not only having a trade plan, but sticking to it, and how to actually factor in calculated losses in your trading. I'm gonna pull up my trade journal here. I'll show you my loss that I just took yesterday on McDonald's. So I ended up losing a little over $5,000 on this trade. You can see here the net ROI was negative 32.51%. I had almost $16,000 in this position. Now, I've gone ahead and blurred out a couple of things. My net P&L is hidden because if you come back later on toward the end of this month, I want to give you guys a monthly recap. Whether I make or lose money this month, I want to show you. So if you haven't already, make sure to subscribe to the YouTube channel and I'll show you what my month ends up looking like. But pertaining to this video, I want you to focus on my equity curve here. So you can see my daily net cumulative P&L, which is green. Now, this specific portfolio, you can see here is my software setups portfolio. So these are all trades that I am taking solely based off of my software, not using any technical or fundamental analysis. And nextly, I want you to pay attention to obviously my trade win percentage, right? Being 91.67%. But more importantly, look at this. You can see my average win to loss trade. Well, my average loser is actually significantly bigger than my average winning trade. And I'll explain why and how I've actually planned this outcome based off of the way I'm managing risk. Now, diving into the first topic, I want to talk about scaling risk consistently. The way I'm going about managing risk, trading solely based off the software, is letting risk dictate my trading, which means that when it comes to deciding where I'm right and when I'm wrong, I am only using the actual P&L, which is the percentage I am up or down on that trade, to determine whether I'm getting out of that trade for a loss or a win. Now, if that doesn't make sense, don't worry, I'll explain, but I want to show you here on my screen. You can see my risk management calculator. Now, this is a tool that I built custom to myself. If you guys don't know, I've been trading for over 7 years, and I started this company, The Daily Traders, about 3 years ago because I really believe that anyone can learn this skill of trading. But there is what I like to call edge factor that comes into play when it comes to finding consistent profitability. If you're actually looking to find lifelong consistent profitability in the market. And for myself specifically, the means to do so was by creating tools and resources custom to the way I go about approaching markets. So this calculator is going to essentially allow me to correctly, and when I say correctly, it's going to allow me to manage risk based off of how well I'm trading and what my results are, and then consistently be able to increase or decrease that risk based off of my performance. Now, I'm a very visual learner, so I wanted to show you my actual risk management model. Essentially, what I'm doing here is I'm either increasing, decreasing, or remaining consistent, what I call RP. Now, RP stands for risk percentage. You can see here, risk percentage. And the second variable is gonna be my win rate. So I'm keeping track of my data weekly. You can see this was last week, April 1st through April 5th. I updated my win rate, obviously being 91.67% on April 5th. And you can see week by week as we go along, as we progress into the year, I'll add more columns and I'll continue keeping track of this. So I'm going to adjust my win rate each trade, and then my RP is going to be adjusted bi-weekly, and that's going to be determined by my profit and loss. So whether I've made or lost money within that 2-week period. So bi-weekly, I mean, I'm taking 2 weeks worth of data. If I have a green 2 weeks, I'm going to increase RP by 5%. If I have a red 2 weeks, I'm going to decrease RP by 5%. And if I'm flat, my RP is going to remain the same. Now, I'm trading with $500,000. I've already input all the data. You can see here what I'm trying to get is my position size. Let's say I have 2 very green weeks. That means I'm going to increase RP by 5%. So my position size goes up to $19,000, right? From $16,000 to $19,000. And let's say theoretically that my win rate then increased to 93%. Well, now that's also going to bump up my position size to $20,000, about $700. But on the other hand, let's say I have 2 red weeks trading, and let's just say I was trading at 30% RP, and now I have to decrease my RP by 5%. So now I'm trading with a 25% risk percentage, and my win rate decreases to, let's say, 85%. Well, now my position size is about half that. It's 10,000. Now, what I'm doing is I am scaling my account, but what I'm making sure of is that when I go to look at my account at the end of the year, and I'm not talking on a weekly or a monthly basis, when I go to look at my net P&L at the end of the year, I want to see a positive equity curve. I want to see a consistent increase in my profit on my trading account. And whenever I do take a loss, as that is inevitable, that is part of trading, and a lot of people just don't like to admit that or show their losses, because that one loss that they encounter is essentially, and what I've seen in most cases, going to wipe out all of their profits and more. So if you found yourself going on these smaller win streaks, maybe you've gone 3, 4, 5 trades in a row and you've built up a nice profit, but then that 6th trade, let's say, you give back all of your gains. Well, it is because you're not consistently managing risk. You are not both increasing and scaling your account or decreasing based off of performance, and that position size that you're trading is not being accounted for from the perspective of your performance, because as traders, our win rate, our expectancies are going to shift. So week by week or month by month, just depending on our strategy and how we trade in the market condition, one month we might have a 90% win rate and the next month we might have a 70% win rate. So with that said, you need to understand you have to consistently adjust your position size based off of your performance using win rate and RP. Now, this risk management calculator, fortunately, is available to students that I work with over inside my mentorship group. And I will say there is a link in the description below this video if you'd like to go ahead and apply for that, because there's a whole lot more that is included. But if you're wondering, that is how you can get your hands on the calculator. Now, moving on, number 2, I want to talk about sticking to your trade plan. But first, what even is my trade plan? Now, I told you that I'm obviously letting risk dictate my trading, and what does that mean? We hopefully understand at this point that I'm not looking at a chart. I'm not deciding based off of a moving average indicator or some technical means or fundamental where I'm right or wrong. I'm simply entering the position with a planned risk to reward, and then I'm getting out of that position when either target is hit or when my stop loss or take profit are hit. You can see here my risk to reward that I'm trading right now and moving forward, unless something changes, this is how I'll be trading with these software setups, is a 1 to 0.5 R or risk to reward. So my upside is 15% and my downside is 30%. And you can see based off of that, my break-even win rate is 66.67%. Obviously, I got that from the risk management calculator. If I go ahead and update my win rate here to that 91.67% win rate at an RP of 30%, you can see my break-even win rate is 66.67%, giving me a expected return of 11.25%. Now, a 0% ER or expected return means I'm not making money, I'm not losing money, I'm trading flat. And so I'm obviously in the profit as long as I maintain that 66.67% plus win rate. Now, one of the great things when it comes to letting risk dictate your trading is that it removes a lot of the emotional biases that might occur. Whether that is looking at a stock's news and you see 2 contradicting articles, one being very bearish, one being very bullish on that stock, or you're looking at a couple indicators and moving averages, and one time frame with those moving averages is telling you one thing and the other time frame you're looking at is telling you something else. You get all these conflicting opinions, and that becomes very clouding to your judgment when you're in a trade. But in the first place, know that you need a plan in place before you enter a trade. You need to know exactly where you're right, how much you're gonna make, where you're wrong, how much you're gonna lose. And that can be based off of a percentage, like I said, if risk is dictating your trading. So I hit my downside of 30% and I got out of that trade. I could have been emotional and thought, oh, maybe it'll come back, and continued holding it, and that trade could have bled out 30, 40, 50% and beyond, but no, I stuck to my plan. That kind of leads me to number 3, which is having calculated losses actually accounted for and planned into this system as a whole, right? So we want to be prepared to take losses. I've worked with hundreds of students, and what happens is traders do not prepare for the worst case. They only prepare for the best. If you're only planning on if you actually hit your target and you don't account for, well, what happens if you're actually wrong, then you cannot actually have planned and calculated losses. So when I say calculated losses are part of trading, what that really means is that we have to know, no matter how great our edge in the market is, that there's always going to be a percentage of time that we are not going to hit our take profit, that we're going to hit our stop loss. I don't care how you're trading. If you are in the market, if you are a trader, you are never going to win 100% of the time. Now, making sure that when you hit that stop loss, even if it's 1%, right? If you have a 99% win rate, you can't let that 1% wipe you out. Unless that's an accounted for and factored in loss. And so when you have that inner confidence, again, at the end of the year, that you know, as long as you stick to the system you've put in place, and when you go to look at your net P&L at the end of the year, you will be positive, you will be green, you will have made money, then why would you go against your trading plan? So I did get out of this trade at a 32% loss, as you guys saw, but you do have to account for a little slippage on either side, especially with options, depending on the volume and the spread. Whatever stock you are trading, some will have larger spreads and you'll have that slippage. So you might end up losing 32, 33%, or on the other hand, making 15, 16, 17%. Just depending, right, based off of, well, obviously my trade plan and how I'm managing risk. But knowing that my expected return is 11.25%, even with a little slippage, I will be fine. I will be profitable. I would say at about a 70% win rate, that's where with only a 1.5% positive expected return, yes, I'll be making money, but if I have a little slippage, I'll probably be flat. So this was a calculated loss. Yes, I lost 5,000, but it was part of my trading plan in the first place because I didn't just plan for the best case scenario, I also planned for the worst case scenario. So remember, as traders, we have to always plan for the worst case. We always have to be fully prepared to lose whatever we're trading with. And at the end of the day, just make sure to scale risk consistently, however you go about doing that, whether it is following along what I teach inside my mentorship group. Remember that following and sticking to your trade plan is vital, whether you're letting risk dictate your trading or trading dictate your risk. And third, let's remember that those calculated losses are a part of trading. And as long as we're actually calculating losing in and planning for the worst case, then we know we're going to be consistently profitable in the long run. Now, if you are interested in learning all of this, learning my system, having access to the tools and resources that I've developed over the last several years as a trader, you'll get access to that and a whole lot more, including the ability to not only see, but really copy my trades. So every time I'm entering a position, I'm posting that entry. And whenever I get out of that trade, I'm posting that exit in this private Discord channel. So I have students who kind of mimic and follow along and copy what I do. So whether you want to learn that lifelong skill of trading or simply just kind of see the success that I'm having or failure, just depending, right? Because this is trading. And like I said, I want to be as transparent as possible, and you're never going to win 100% of the time. But if any of that is of interest, the first link in the description below will take you over to my mentorship group application. And if you are accepted, I look forward to working with you. Make sure to subscribe for more, and I'll see you guys in the next video.